Welcome everyone to today's webinar, Navigating New Mandates and Streamlining Sustainability Reporting. We're going to spend a lot of time going over the regulatory environment, voluntary frameworks, the supposed harmonization of those things, yet the distinct kind of differences that continue amongst them. And before I kick it off, let's introduce you to those that we have with us today. So I'm Melissa Raid. I'm the Chief Sustainability Officer of SustainedLife. I will kick it off and pass it to Sarah Williams, who we are so pleased to have join us today. She's always had a particular interest in long-term sustainability, and Sarah, who is the Senior Manager and ESG Lead at Wipfli, focus on the risks and opportunities that ESG issues present. She spends a lot of her time helping corporate clients with fund structuring, audit and tax compliance, SEC custody rule examinations, consulting, and as I'm sure so many on the line experience, now also ESG. So welcome, Sarah, and thank you so much for joining us.
Thanks, Melissa.
Great. Okay, so before we dive into the real meat of what we want to get into today, just a high level, for those who are unfamiliar with SustainedLife, we're a decarbonization SaaS platform focused specifically on supply chain engagement and decarbonization of Scope 3 emissions. So our suite of greenhouse gas calculators and auxiliary tools helps businesses measure their emissions, set science-based targets, engage with suppliers, automate data flows, and of course, harmonize disclosures across the alphabet soup of ESG. We strongly believe at SustainedLife and intimately know that reporting for reporting's sake is not what anyone wants to do. And so as much as we can ease that onerous reporting burden through technology that takes a single source of data and manipulates it into the outputs needed across all of these frameworks, that's a lot of what users are coming to us for. So again, thank you all so much for joining us today. And with that, I will kick it off to Sarah to give a little introduction on Wipfli and their work in this space.
Yeah, thanks so much, Alyssa. And I just want to add, I'm really excited to be here talking about sustainability with you today. And for those of you who don't know Wipfli, we are a top 20 accounting and advisory firm with more than 3,000 associates and a deep bench of experts. We serve as the trusted advisor to our clients, and these clients range from large public and private companies to closely held family-owned businesses to individuals across 14 industries. And thanks to our partnership with SustainedLife over the last year, we have been able to combine our sustainability service line with a powerful software solution for our clients to seamlessly measure, manage, and report on their sustainability initiatives. And I look forward to sharing a little more about that as we get into our conversation, Alyssa.
Awesome. Likewise, and thank you. I should mention for those who don't know is that SustainedLife works really closely with advisory and consulting firms who again utilize our tech as kind of the backbone to support so many of their client services. And I think that's something that we're seeing a lot in the industry where technology in this space, especially right now, is not going to fully replace human interaction and support and solutions, right? This is about giving service providers and in-house professionals, those that are doing this work either for clients or for their own teams, the right tools and resources so that they can do it the most efficiently and effectively. So let's start off with a little bit of a landscape overview on what we're seeing. I kind of mentioned it on the front end, but we're seeing today a huge increase in regulatory mandates and disclosure requirements. I feel like you almost cannot go, certainly a week, I won't say day, but certainly a week without hearing about a new mandate that has come out and new requirements. So super brief overview. We have in the US, our most exciting mandate, the California Climate Package, SB 261 and 253, requiring companies to disclose emissions and climate-related financial risk. We see similar proposals out of states like Washington and New York. While the SEC rule, which is meant to come out any day now, we hear it's actually in March ahead of the April schedule, kind of comes out with its proposed rule as well on climate disclosure. You have, of course, the CSRD in the EU, a very broad and robust, ambitious sustainability disclosure requirement based on double materiality that again extends beyond just emissions to broader sustainability topics. You have the ISSB and the IFRS S1 and S2 standards, which although not mandated, this is meant to be the global baseline, is is being codified into law by several jurisdictions, over a dozen jurisdictions in various proposals. And so what we essentially see here is whether a voluntary framework or a law that refers to a voluntary framework or creates its own disclosure, a huge increase across global jurisdictions and regions mandating disclosure requirements for listed and oftentimes large, and in some instances, not so large companies. And so while there's this intent to harmonize the efforts and the reporting frameworks, there is still a lot of distinction that exists and kind of persists across the voluntary frameworks. And then again, how each country is either codifying those frameworks into law or coming out with their own disclosure requirements, kind of independent from those frameworks. And so this leads to a very complex, somewhat frustrating, and frankly burdensome reporting environment for the companies that are mandated to disclose, as well as, and what we're going to focus on a lot here today, the value chain companies, because so many of these laws include the requirement of scope 3 emissions, and that's clearly where emissions disclosure is headed. Now there's a whole slew of companies that aren't directly mandated themselves, but have their most important customers saying to them, we expect you to report this data to us because it's part of our scope 3 boundary, and we who are regulated need to report on it ourselves. So that's just a little bit of a regulatory overview. We have tons of resources that we can also link alongside this that give a bit more detail on each of those regulations, who's covered by company size, net turnover, things like that. But we're going to focus today's conversation on a couple of key pillars that we want to anchor on. So we're fortunate enough here to have Wipfli joining us. And so we're going to talk about the evolution of their services and what they've seen across new demands in their client base. I know we have a lot of firms, consulting and advisory on the line as well. And a lot of the content here is for you. There's all of these new service practitioners that are being asked to do this work by their existing corporate clients. And so Wipfli is going to share a little bit on the training and the resources and the education that they've offered to their own staff to upskill and really grow this service line for their clients. We'll talk a little bit on why engage an advisory firm out of all the different solution providers out there. And we'll focus a little bit on drivers and external expertise. And then again, how does a company, whether in-house or service provider, go about assessing technology to best support their needs and goals, and in the case of a service line, what they need to furnish for corporate clients? So that's just going to guide a little bit of our conversation today. So there's a lot for us to get into. We've kind of focused a little bit on the changing sustainability landscape. I want to kick this off, Sarah, with a question to you. Can you just talk a little bit about how your services at Wipfli have evolved over the course of that evolution? And have you noticed any key aspects that have been modified to meet the shifting demands of your clients?
Yeah, that's a great question, Alyssa. And yes, our services in this space are continually being modified. So I would say for a lot of our clients, ESG started out as a marketing initiative, and that's definitely a generalization. But overall, it was used as an opportunity to share about some of the great things they were doing for the community, or, for instance, a way to attract people to their teams by their focus on great employment practices. However, as the regulatory landscape continues to evolve, the risks both of not addressing and not reporting, or addressing and reporting incorrectly, have led a lot of our clients to seek outside assistance in building more robust ESG teams and strategies. They're looking for ways to demonstrate their authenticity and prepare them for sustainability reporting. And as the requirements continue to evolve throughout various regimes, we begin to gain clarity on what will be expected of them. And although there are numerous nuances between the various jurisdictions, as you were pointing out, the ISSB and other regulatory bodies have worked together to harmonize sustainability reporting worldwide. And one of the most prominent data requests we are seeing throughout is the measurement of greenhouse gas emissions, starting with scope 1 and 2, and eventually requiring scope 3 reporting. And largely due to this emerging regulations, our clients are increasingly reaching out looking for assistance on measuring their carbon footprint. And so we have developed services to assist them wherever they're at in this initiative, whether they're just learning about the data needs that need to be collected and need an ESG data readiness engagement, or they're ready to find software that fits with their specific needs. we try to help clients in taking that next step. That
Mhm.
being said, though, we really get excited about the value clients can add with sustainability and the opportunities available for improvements beyond just complying with regulations. Using the data collected to make better business decisions, improve risk management, reduce costs, or gain access to financing. These are all ways we've seen clients add value with sustainability, and we get excited about helping companies accessing new opportunities with better ESG management.
Yeah, there's so much that you said there that I actually want to dig into. A couple things. One, you mentioned auxiliary benefits like retention. That is something that is actually quite close to our own founding story at Sustain Life. But essentially, you have these large enterprises that have deeper and more mature sustainability programs, and so they have all of the auxiliary benefits that those programs afford them. Right, things like better retention, being able to keep employees, especially of younger generations who have that value, reduced operating expenses. It's not just about sustainability. It's certainly not about just sustainability for sustainability's sake. There's all these auxiliary business benefits. And so what we're seeing, and so much of what we're inspired by at Sustain Life, is building that same capacity and opening up those opportunities to the mid-market type value chain companies that are earlier in their journey and are a little bit being compelled to gather this information and metrics, again, for their most important buyers and customers, but are also seeking that support to really do it the right way, to build with an intentional strategy and philosophy and really start to integrate this into their core business operations so that they can take advantage of all of those auxiliary benefits. And another thing you said that we see all of the time also along our client base and across the market is authenticity. And that's a word, and we use that word all of the time because I think where so many companies are with this is they're being asked to furnish information. They're, especially when it comes to carbon accounting, not experts. They may be not even in a sustainability team. Oftentimes this is like logistics or procurement or even like the head of finance or from the capital markets team. And they're being asked to do something they haven't done before. And they're looking for the right kind of partners to make sure that they're doing it authentically and with the security that they're doing it the right way. And that's so much of what we see because this is such a new space for so many companies. I wanted to dig into that most common request for emissions accounting across scopes 1, 2, and 3. And I suppose maybe a dual question, but how are most of your clients approaching this? And what level of knowledge or familiarity do you feel like they have with carbon accounting when they come to you with these requests?
Yeah, so for a lot of our clients that have not yet made a sustainability plan, but rather are looking into measuring because of customer and business partner requests, we see a bit of shock and I would say almost fear when they first come to us. Our clients feel really vulnerable when they're asked to report externally on their emissions, and they have never even reported or managed this internally. However, generally, these requests from the supply chain have allowed them some time to comply. And so we can work with them to prepare for managing sustainability, including things like developing a cross functional team to lead their efforts or building a culture that begins to view things through a sustainability lens, as well as helping them to develop a strategy and a roadmap. And so our clients go from a place of avoiding sustainability, largely because of the unknown, to making significant improvements to their business decisions because of the additional data they now collect and use in their management analysis.
Yeah. And what roles is it that you're typically seeing from your corporate clients that are actually leading this effort? And are there any trends that you see of who that role might be by industry or company maturity or size or any other kind of segmentation?
Yeah, so in regards to the roles we see, I would say in a lot of the SMEs we work with, often this is initially tasked to someone managing environmental issues or those involved in operations management. However, the company's looking to truly build value and not just comply with sustainability regulations and the increasing stakeholder demands. These companies are starting at the top and integrating sustainability into overall corporate strategy.
Mhm.
From surveys we've taken, boards and top level management consider sustainability as very or extremely important in areas such as new product development, reputation building, and overall corporate strategy. And we've seen this trend with our clients as they increasingly find it important to build a culture of sustainability, to be able to connect with their stakeholders and successfully meet those demands.
Yeah, I definitely have seen over the past several years this transition into the board level engagement with these issues, right? Sustainability kind of started as a bit of a domain specific silo. Maybe the good companies or programs, it was a little less siloed and more centralized, but really now seeing this shift to board level engagement, top down and truly integrated into the business model. Yeah. Now,
Exactly.
as the space has evolved, what specific inquiries or demands are you receiving from your clients specific to sustainability reporting? And how has that influenced Wipfli's strategic approach in providing those services?
Well, let me give you an example of something we commonly see. A lot of our clients work in the supply chains of large public vendors. Think of companies like Lowe's or Home Depot, Costco, Amazon, Walmart, Target. Our client might make a plastic part for a piece of a machine that gets sold at, let's say, Target. And because this client is in the supply chain of this larger public entity that is preparing for SEC regulation, they are impacted by the emerging sustainability requirements through a trickle down effect. These entities, like Target, for instance, have already set sustainability goals, which most likely include a goal to reduce their greenhouse gas emissions. So, Target, for instance, is committing to net zero and also redesigning their products for circularity by 2040. So, if our client is in the supply chain of any one of these larger vendors, they will receive a questionnaire or a survey from these business partners asking them to report on what sustainability initiatives they've taken. This only makes sense as the emissions from companies in Target supply chain, for example, are included in their scope 3 emissions and directly impact the larger company's ability to meet its sustainability goals. The questions on these surveys that our clients receive are very much in line with what the proposed SEC climate rule and the California rules and global emerging regulation is requiring the companies to report on. So, for instance, they're asked about their sustainability strategy and what plans they have in place to achieve these targets. They're also asked about who has been put in charge of their sustainability program and how is that person being held accountable. And then we get to the data piece. They're asked whether they are measuring their scope 1, 2, and 3 greenhouse gas emissions and whether they obtain third-party verification on these emission calculations. These surveys also typically include questions about their climate risk reporting and whether they report internally and externally on sustainability. And because these are these are the requests our clients are receiving, this is shaping the types of services they need from us.
Yeah, that makes a ton of sense. And it's obviously no surprise that we are partners because that very same enterprise supply chain network effect of your example of Target, but all of these large enterprises that have set scope 3 or net zero long-term targets to decarbonize have to get this information from their suppliers. That's the only way that they are going to achieve that goal. And that's, again, so much of what we focus on in Sustained Life of kind of using technology to bridge that data gap between enterprise and supplier to automate that. But these things that the suppliers, the SMEs, are being asked to do, the third-party verification for emissions disclosure, climate risk, these are not small tasks and these are not simple tasks. And we see this all the time in the value chain companies that we work with as well. They're being asked to do these relatively complex and mature and sophisticated things by their most important buyers. And for the smaller companies that are not directly mandated themselves and are just now being compelled by the supply chain network effect, it's a really steep learning curve. And so I'm curious, what maturity level are your clients coming in with here? Is this about they've done this before and you're kind of growing and polishing existing work, or is this more ground up work for support to meet these new demands?
Oh, definitely, especially as many of our clients receiving these surveys are really just at the beginning phase. So they have not previously thought of sustainability as being something that they would need to report on in the near future. So when they receive these assessment forms, they can be a little surprised by what they're being asked to provide. And this is a pretty simple scenario that I've painted here, but for most of our manufacturers, they're working with several vendors and receiving requests for reporting in various formats following different standards. Because of the various complicated scenarios and because our clients are often addressing sustainability reporting for the first time, we've added a pre-ESG assessment engagement to assist clients in evaluating their approach to sustainability based on the vendor requests they are receiving and the regulation they expect to be subject to. These clients are often given a little time to figure things out, and so they might not want to start with external reporting, but they feel the need to begin to measure and manage their environmental footprint so that when the requirement hits, they aren't caught lacking. And I'm sure you know this, Alyssa, but measuring your carbon footprint isn't something that can be done overnight. One thing you need to make sure is that you're collecting the proper data. And so we also offer an ESG data readiness engagement to help clients understand what data they need to begin collecting and to assess their collection methods, help them prepare for that next step of purchasing software to organize and report on their emissions data.
Yeah, we actually see a lot of that same readiness type work as well. A significant driver actually from CSRD out of Europe, which impacts 50,000 companies. That has like the broadest coverage, even for non-EU entities, but any business who has an operation or does business in the EU and meets certain size requirements. But whether it's for a supply chain company or frankly, even companies that are directly mandated for the first time by something like CSRD, because you don't have to be that big of a company or that big of an operation to actually fall within its requirement. We're seeing a lot of that same type readiness work. And I wonder, when you do those engagements, where do you see the biggest gaps across your customer base on what those most common demands are, whether it's strategy or emissions calculations or governance and oversight? And are there any areas that you see that companies kind of already have the best footing to move forward compared to those where it's really, from the beginning?
Yeah, from our experience, while there are a lot of promising trends, there is still a long way to go before corporations fully integrate sustainability into their business strategies and operations. Data management is one of the key areas where we feel our clients could add a lot of value. Some organizations still use spreadsheets to aggregate their data, which can lead to inefficiencies and inaccuracies. In addition, we often see a clear disconnect between strategy and execution within organizations. And this gap, combined with new pressures to focus on compliance, can hinder business leaders' ability to integrate sustainability into broader business goals. Some organizations face challenges such as weak commitment from the board, little accountability, sustainability teams without authority to implement initiatives, and as well as talent gaps. But on the positive side, there are areas where some companies are making progress. I just read a study forecasting that 90% of business leaders plan to increase their ESG investment in the next 3 years, with the top 3 areas of investment being dedicated ESG personnel, ESG specific software, and employee training and education. New technologies like AI and machine learning are also making rapid improvements and are forecasted to significantly improve sustainability reporting.
Yep, yep. Well, we'll get to technology and AI a little bit later in the dialogue. We certainly have a lot to focus on there. But I want to shift a little bit actually from the client perspective over to your own staff and training and resources. And maybe you can share with this group how Wipfli has upskilled and trained and educated your own staff and service providers into this new ESG service offering. This can be a bit of a steep learning curve, as we talked about, even, as a mid-market company trying to do all this and meet these demands. So have there been any kind of formal trainings or certificates or designations that you've pursued for your staff?
And that's a great question. And I guess I would start by giving a shout out to the AICPA, as CPA is one of our principal go-to sources, has been the AICPA ESG trainings and CPEs and other guidance that they have been making available. For example, one of the courses they provide is an ESG fundamentals course that we've used to bring our new associates up to speed quickly. They also provide guides such as the Sustainability Review and Examination Guide that we've purchased to serve as a resource for these engagements. Another thing we've done, and I must add, this is not the most popular method, is assigned reading to our staff. So, for instance, our staff involved in data readiness and greenhouse gas emission engagements, we require that they read and familiarize themselves with the greenhouse gas protocol. Other reading we have them doing is all the emerging regulations, such as the SEC proposed regulation and the recently issued California regulation, as well as the IFRS S1 and S2 regulations. And then training on the different standards and frameworks, such as FSA level 1 and 2 training. These are also trainings we've found to be helpful in building out expertise.
Super valuable. We get a lot of inbound from professionals asking what resources and trainings are out there to learn and grow expertise in this space. So we'll try to bullet those out for everybody in a follow-on, because it's really helpful. I mean, just knowing where to look for the right resources, where to find that trusted source of information is really critical. And there's a lot out there, so we'll be sure to list those for everyone. You kind of alluded to this, and I hope this isn't too sensitive of a question, but frankly, how receptive have your staff been to these new initiatives? ESG and climate is obviously a new domain and subject matter focus, which can be really intimidating and daunting, but obviously at the same time represents a significant business opportunity to expand services into this space. And so for the other firms or consultants on the line, what advice do you have for other advisory firms that are in the midst of or thinking about launching their own services in this space in regards to staffing, training, certifications, et cetera?
Yeah, so actually, that is one of the parts I find really fun about being involved in this space. We have found that a lot of our staff are really excited about and motivated to be involved in this emerging area and in assisting clients to add value by transitioning to more sustainable ways of functioning. And that's also one of the things I get excited about here at Wipfli. Curiosity is greatly supported, and we encourage staff to be involved in areas they really care about. And studies have shown that employees work harder and stay longer with their employers when they can find satisfaction and meaning in their work. And particularly the millennial and Gen Z generations are known to place a greater importance on environmental and social concerns than their predecessors. And these generations continue to make up a larger percent of the workforce. In terms of how I got into this, I lived a lot of my formidable years in Kenya. We lived in a rural location and built our house in an area where there was no electric grid and no running water. And so we installed solar panels for our electricity and hot water, and we used our tin roof to collect the rain as our source of running water. And this experience I had living in a way that didn't deplete the scarce resources available gives me hope that if we all work together, we can find affordable and sustainable ways to live and to do business. And because of this, I get really excited about helping our clients start their sustainability journey. The world has changed so much since the beginning of the manufacturing era. For instance, the depletion of our natural resources and overproduction of plastic have led more and more customers and employees and people everywhere to be concerned with how companies can function sustainably. And because people are now concerned about how businesses function, there's an opportunity and a market for companies to create value for themselves and those around them when they embrace the transition to more sustainable operations.
Well, I have to say that origin story is amazing and probably not wholly relatable to many folks on the line, but what an incredible experience, and really just such a tangible way to connect with the impact side of sustainability. I do like how you're also at the same time mentioning the financial side of financial sustainability. And this is something we talk about all the time, that sustainability in its very core of definitions includes financial sustainability. It means being able to operate today without sacrificing the ability of future generations to operate in the future. And so if you think about that in terms of a business, right? What is business financial sustainability? Being able to operate today without risking your ability to grow and to continue to operate in the future. And so I always like to kind of anchor on those two, because there are those that are super impact driven, others that are really financially driven. And I think the whole point is that you don't have to choose. This is interconnected.
Right, right. Agreed.
Cool. Well, so um, you've shared a little bit more about how Wipfli has approached this, some of your staff training. Frankly, there's all different kinds of boutique and specialty consultants that are out there. And so why do you think that advisory firms specifically are increasingly being approached to take on sustainability reporting and ESG work? Are there like certain or specific challenges or complexities that necessitate their involvement or technical perspective? And how do you see these factors maybe varying across either the voluntary or the regulated effort?
Yeah, so if you think about an advisory firm like Wipfli, they work with clients over numerous industries. They have deep expertise and knowledge from working in all aspects of the business. They hire top tier talent and have continual training and resources to help them stay current with all the emerging regulation and industry trends. And then they have collaborative networks and partnerships. Altogether, advisory firms can be a powerful resource to clients in their sustainability journey. We have the ability to support our clients with a deep understanding of sustainability issues, trends, and best practices. We offer a broad perspective on how sustainability challenges and solutions can vary. We can help companies integrate sustainability into their overall business strategy. And then we can leverage our partnerships. So for instance, our partnership with SustainedLife, which provides our clients with the tools they need to measure their sustainability performance, set targets, and track progress. Yeah, without you guys, it wouldn't be easy.
Oh, well, thank you. We appreciate that. But I really do. I mean, that is what motivates and inspires us so much, that it's about giving the practitioners and the folks that kind of own those business relationships the tools they need to do this work well and with integrity and with rigor, because we talk about it all the time, how there's not enough sustainability professionals in the world to do all this work, right? This is about increasing capacity, upskilling, educating, and leveraging tools to be able to do this work. So yeah, we're aligned and on the same page there. Given the increased demand for sustainability reporting services that you're seeing, how does Wipfli go about providing or balancing a tailored solution for each corporate client that's unique, but while also leveraging kind of best practice and lessons learned from previous engagements for maybe companies in similar industries?
Yeah, another great question, Alyssa. And I think the key for us here is the gravity we place on building relationships with our clients. Of first importance to us is understanding a client's unique needs, because each client has unique ESG goals, challenges, and industry contexts. So we like to start by conducting a thorough assessment of the client's current ESG performance, as well as their future goals and industry-specific challenges. And then we also work to stay updated with the latest sustainability trends, any emerging regulation, as well as the best practices in the client's industry, in order to leverage this knowledge to provide relevant and effective solutions. Then, using insights and lessons learned from previous engagements, we help clients avoid common pitfalls, such as not having good data oversight or setting unrealistic goals. And by regularly reviewing and adjusting our strategies based on our clients' evolving needs and the changing ESG landscape, we can both tailor our services to each client's unique needs and at the same time leverage the industry's best practices.
Yeah, that makes a lot of sense and seems like a very efficient and just thoughtful model, frankly. I do want to shift a little bit to drivers for external expertise. Reporting is crucial, obviously, but like I said in the very beginning of this, reporting for reporting's sake not valuable and not how anybody wants to be spending its time, right? Reporting is just one piece of a broader, more intentional pie. And so what maybe are some of the other areas that your customers are looking for support? And have these requests started to feel almost more integrated into that core business operation and value creation over time? I feel like that's so often where the advisor, as you were saying, why do they go to the advisory firm? That's so often kind of the role and the broad service that you're providing in terms of core business operations and value creation.
Yeah, so we continue to see more and more clients reaching out for assistance with their sustainability initiatives. With all the clean energy tax incentives, we're seeing numerous clients asking for assistance in figuring out if they're eligible, and if so, how to apply for those green tax credits and incentives. We've got clients that have made lofty goals to reduce their emissions, but then realize they don't know how to achieve these goals and need a little assistance in developing a strategic plan and finding the technology that's right for them. We've also got clients that have already made significant adjustments to become more sustainable. For instance, they are already running on renewable energy, but aren't doing any internal or external reporting and are now wanting to measure and report to get the credit for being front runners in the space. And we also have clients who are completely new to sustainability. They've been hearing about it, but not have had time or internal expertise to explore it. But now they're being asked by their vendors to report on their ESG initiatives. So these requests are often the most urgent, as we've had clients that stand to lose their biggest customers if they don't report that they are performing adequately on ESG.
Yeah, we see that dynamic a lot of, my biggest customers asking me for this. We also see the RFP issue a lot of, this is a significant business opportunity and I'm expected to furnish this information, whether it's specific metrics, or I'm really expected to have a real strategy here. And again, I better get serious about this and be thoughtful about it and think about this holistically, because clearly that's the expectation where, I'll use an example. If you want to be selling into the federal government under this new proposed federal acquisition rule, you got to be doing some pretty ambitious things. I mean, that rule specifically, and we see this expectations across, from that rule, as well as, again, suppliers and the value chains of some of the large enterprises out there. They're expected to set science-based targets. They're expected to not just measure, but also allocate emissions on an organizational or even product level to their buyers. And so when it comes to reporting, across the broad alphabet soup, are there certain frameworks or disclosures that you've seen emerging as kind of the favored approach amongst all the options?
Yeah, although there are several frameworks and standards that have gained prominence, the CDP is by far the most common framework our clients are being asked to comply with. Additionally, we do observe requests for inclusions of other frameworks such as GRI, SASB, and TCFD, but overall, with the CDP's focus on climate-related disclosures for both suppliers and business relationships, this one stands out as the most prominent. And because of these dominant frameworks used by our clients, it was really important for us to partner with a CDP accredited and GRI certified software provider. And so we get really excited, Alyssa, about the updates you've made to simplify reporting in many frameworks at the same time.
Thank you. I mean, it's obviously always so great to hear that, but these are the real challenges that companies are being asked to disclose from different stakeholders, right? From their suppliers, from their investors, primarily. And so our sustainability reporting feature that's harmonizing across all those disclosures so that you don't have to go through CDP and at the indicator level, put every piece of information and then move to the GRI standards and do the same thing. But actually, again, leverage technology so that when you're moving through and putting data in or really building up, a collection of those metrics, you do it the one time and let the technology do all that harmonization and aligning to the indicator level to give you the output that you need. So we're really proud of our software certified status with both CDP and GRI, and just agree that those are also the most common requests that we see from our user base, as well as globally. This is talking about across those two, like 50,000 companies that disclose across those two frameworks and disclosures. So we're talking about technology. Let's continue there. Maybe you can share a little bit, because I know there's a lot of folks on the line that are always assessing and looking for the right tools, and there's a lot of them out there, frankly, and it can be really hard to have a programmatic kind of rigorous way to assess your options. So could you share a little bit about what Wipfli's journey was and how you assess technology solutions to support the ESG service line? And where do you find internal services are remaining the most effective to kind of leverage technology, and where is the technology really providing the best efficiencies and operations to your client service lines?
Yeah, so according to research, organizations that have adopted automated digital solutions for emissions measurement are more likely to measure their emissions comprehensively and also more likely to reduce emissions in line with their ambitions. From what we've seen, digital solutions can help businesses improve the accuracy of their emissions measurement, rigorously measure, track, and reduce their environmental footprint at scale. Smart technology can also help businesses significantly cut down on their greenhouse gas emissions and contribute to a net zero economy. So we feel that selecting the right technology solution is critical to our clients' success in sustainability. We understand that the right technology solution will vary for our clients based on their ESG goals, their size, and their existing systems and processes. And so before assisting a client to select a software solution, we like to understand their ESG goals and objectives in order to align the software with their specific needs. Once a company has identified their goals, they can begin to evaluate potential technology solutions, considering, for instance, scalability, flexibility, ease of use, and cost effectiveness. When recommending software to our clients, we also review the vendor's track record, reputation, and experience in the ESG domain, as well as their customer support, training, and implementation services. And then once you've evaluated all of this, it's time to think about how the technology solution integrates with the company's existing systems and processes to find the solution that can help a company avoid any potential disruptions to their operations. And because our clients often work with many vendors, requesting them to report according to different standards and formats, our clients get really excited about technology that can simplify this reporting. One thing they love about the SustainedLife software is the way it simplifies not only the burden of collecting the data, but also preparing the necessary reports. And we've seen this to be a huge value add for our clients.
Yeah, yep, great. I want to anchor on one thing that you said, because I think this is so critically important about understanding what the goals are of each corporate client, because that's going to impact, yes, what solution, and really what data solution, as well as broader strategy and solution you provide. That's something that we talk to customers so much about, specific to that supply chain and scope 3 data collection and decarbonization. When you think of something like a spend-based approach, which is often where companies start out, it gives you the hotspots based off of where you spend your money on where should you be engaging for your emissions. That's great as a starting point, right? And to give you kind of a number and that hotspot indicator. But if you're actually looking to decarbonize, using that spend-based approach isn't going to be sufficient, right? The only way that number goes up or down is based off of the money that you spend. And so looking for technology solutions and tools that go beyond the spend-based and really move into what we call the hybrid method, but really collecting primary data from suppliers so that you understand, am I working with a supplier that has a sustainable sourcing program, that is using sustainable materials and ingredients, that's running on renewable energy? What are the actual emissions of my supplier, so that I know, where do I need to engage? Where are there opportunities for reduction? Where do I just need better data? And that's a really key distinction and takeaway, I think, that can also be really helpful for folks in identifying the right tools, to do this work for them. I wonder if you could provide an example of how technology has helped really streamline sustainability reporting for your clients. You mentioned CDP and GRI, but particularly in terms of addressing the complexities of reporting requirements across those various standards, and again, from those various vendors that are asking for similar but maybe slightly different information.
Yeah, so technology has played a pivotal role in simplifying sustainability reporting for clients, especially when dealing with the intricate demands of diverse vendors and standards. So, for example, the SustainedLife software can transform the data collection process with its automated data retrieval from internal systems, databases, and also external sources. And this allows the companies to efficiently gather relevant information without manual effort, which not only streamlines the process, but also ensures the accuracy of the data. And then on the reporting side, I love how the Sustain Life software, again, creates significant efficiencies by mapping the data to specific frameworks. So as I mentioned before, the majority of our clients need to report to CDP. However, they can get numerous requests from business partners, and some require the reports to follow other popular sustainability requirements, such as GRI or SASB or TCFD. And it's important for our clients to be able to quickly pivot to another reporting framework and have the software automatically be able to provide the data in various formats. So the software greatly reduces the complexity of adapting to different standards and at the same time ensures consistency. And then one other thing I would add is that technology allows real-time tracking of sustainability metrics. So companies can monitor progress, identify gaps, and address issues promptly because all the information is in one system that allows the client to visualize their key performance indicators. And this dynamic approach enhances transparency, and they're able to be way more responsive in their reporting.
Yeah. I love, honestly, just the idea of like, let the technology do the work for you. Automated data ingestion, harmonization, data accuracy, like that is why technology, that's what it's there to do, to create those efficiencies and optimization and also provide insights, right?
Exactly. Yeah, you don't
Okay,
want to.
well, I'm quite proud of us, Sarah, that we've actually kept ourselves pretty on time, which I'm also a little bit surprised about. But as promised, we have just in between 10 to 15 minutes for questions. So we'll just anchor on a couple of key takeaways before we open it up to that Q&A. But just, if a couple of things we just want all the listeners to really anchor on from this conversation. One, ESG has evolved from that siloed kind of niche discipline into a comprehensive business strategy. That is really where we are today. We've seen from Whitley's perspectives, client demands shifting towards regulatory compliance, again, whether they're directly regulated themselves or frankly driven by that supply chain network effect because their most important customer is regulated. That's really driving a lot of work in emissions measurement and planning and strategy. Firms are prioritizing formal training through certifications and resources. So I know we have a lot of firms on the line. So please take advantage of those resources. Also, complexity is driving organizations to seek external expertise. And that's a really important one. There are literally companies and providers that are dedicated to this exact thing. And they are here to support companies on this journey so that you don't have to do it by yourself. And even if you have a team, you can make the right informed decision about what tools help you best do your job, which of course brings us to the last one. Choosing the right technology, the right resources is crucial. So be mindful and thoughtful in those assessments. And with that, let's open it up to some Q&A. I will open up the chat here. I did not do the best job of saying this on the front end, and I apologize. If you have a question that we don't get to, please post your question as not as anonymous because we will follow up with you with an answer, but we can't do that if you've been anonymous. So let me go through some of these and see where we are here. Okay, so I think we had a good bit of conversation here. This is a great question. How do you overcome the challenge of meeting sustainability goals at an organization where sustainability is just checking the boxes? And at organizations who have limited budget to invest in any software and still following a clumsy method of maintaining spreadsheets and making up reporting data? Well, I'm happy to answer that one. And Sarah, please hop in because we do see this a lot, honestly. So many companies are not pursuing this or frankly looking for solutions and support because they altruistically, or not even altruistically, it's not even part of their business model or philosophy. It's that they're being compelled to do it. They don't want to do it. They see the writing is on the wall though, right? It's all right, I'm going to be mandated by this thing. It passed, or like clearly my 5 biggest buyers are all asking me for this. The industry has shifted. This is a norm and an expectation. And so I do actually think you get a lot of the check the box exercises. And I think the way internally to build support for that and kind of, get support and sell this vision is about how important are those dollars to you in the businesses of the customers that are asking you to do this? Check the box. The box is being checked for a reason, right? Who's asking you to check it? And especially if you're not mandated and it's a customer asking you, how important is that business to you? Because I bet you it's pretty important. And so this check the box exercise, I almost feel like it's a challenge that answers itself because it becomes a quintessential kind of typical business question of how much do you want that company's business? Because they have very real goals that their investors and their stakeholders and their regulators are holding them to. And they're going to be making business decisions throughout their supply chain of who they do business with so that they're able to achieve their goals. And so I'd say whether it's check the box, I almost think check the box can be as powerful a driver as having it be kind of integrated into your core business strategy. And so if you're meeting resistance at the top, I think it becomes a pretty clear conversation on just dollars and cents of that business.
Yeah, definitely agree there. And just thinking, helping companies to begin to learn to understand the value that can be added, through reducing costs, through, being able to access financing, as they learn. I mean, this is a new area for them. So it's a steep learning curve, I would say, to get to where they're gonna see more value than just meeting that compliance piece.
Yep. We have another question on the compliance regulation side here. Is there a regulatory threshold for small companies with low carbon emissions that do temporary work for numerous client companies and are not embedded at any one plant? So I'll kick this one off as well if you don't mind, Sarah. But we actually just furnished a regulatory kind of white paper that we will share and post here as well. But that takes you through all of these global jurisdictional mandates on sustainability and climate disclosure. And all of them do have both phase-in periods as well as kind of tranche-based tiered requirements of who is required to report. So for instance, if you look at the proposed SEC rule, that starts with in year 1, large accelerated filers that have to report. Then it's your large filers, and then it's your smaller filers. So it does depend on the size of the company. And again, that's obviously only for public listed companies. If you look over to Europe, the CSRD, that broad, ambitious sustainability disclosure law, that also has a similar phase-in period and kind of tranches by company size. And we'll share this in the resources because this one goes by a couple different levers, but basically by employee count and by net turnover. There's different tranches that dictate when it is you have to report in. So the answer is, depending on the regulation, yes, there are definitely size requirements, and you may not be included in that to report. When it comes to the supplier or the customer request, remember, that's not a mandate. That's just how important is that business to you. So it doesn't matter how big or small you are. I'll also just mention one other law because it's fresh in my mind, that in the UK, SEEKR is kind of their emissions disclosure law. And if you are a small consumer of energy, I think it's 40,000 kilowatt hours a year, you are also exempt from reporting. So get your energy management, get your bills underway, because if you can prove that, and it might be the case for a company like this, where you're not working entirely in a single plant, that you might be under that operating threshold for energy consumption. Okay, so I know we have a couple minutes left. We have a question on how the reporting of climate risks have evolved in the past couple of years. So maybe we want to spend a little bit of time talking about TCFD, the Task Force on Climate-Related Financial Disclosure, that was born in 2015, I think first standard published in 2017, and how that's evolved into the ISSB IFRS S1 and S2 disclosures. I think on the risk side, we've definitely seen a lot of evolution here. And again, this is when we think about climate risks, it's so often anchored and predicated on financial materiality, right? What are the financially material risks and opportunities that your business is faced across environmental, social, and governance topics that your investors and capital markets should know to be able to properly price that risk into your business, right? It's part of any kind of risk pricing. And so I think from our perspective, what we've seen is that has really evolved and matured over the years, where you're able to have that same kind of conversation about risk pricing and mitigation efforts, and almost like the same kind of modeling of that risk as any financial risk, regardless of whether it's an E, S, or G topic. Sarah, I don't know if you have anything to add from what you've seen from your corporate clients or work in the space, or we can move on to another one.
Yeah, no, we're seeing the same type of thing as this all develops. Yeah.
Yeah.
Mm-hmm.
So this one, and we do again get a lot of these questions, and we spent some time on this, but any suggestions on how to enter into an ESG or carbon accountant career? So maybe from the advisory perspective, what suggestions might you offer for someone who's new to the field, or, you know, perhaps in advisory and wants to get into that new ESG service line team?
Yeah, I guess, I mean, how I got into it was just being curious, and, you know, started to listen to a ton of podcasts, started to really research the topic, and just got excited about it. And then started to do trainings, and, you know, being a CPA, I did the ESG fundamentals course, and then I did the FSA trainings. So there's stuff out there you can do, but I wouldn't start with that. I'd start with just you know, there's so much out there you can learn and read about before the trainings as well.
Yep. Yep. And then I think this one will also be helpful, and maybe we'll cap it here. But maybe you could share a little bit. We got a question on if SustainedLife or other software tools you might use provide training to your staff enablement on how to use the tool and actually deploy it for sustainable consulting. I know that enablement is certainly something that we are really proud of and take, you know, great care in. So maybe from your perspective, maybe how the experience have varied, you know, across different solution providers.
Yeah, so I mean, over our year, this last year with partnering with you guys, you've been so available to us, and you know, anytime we have questions, we've had several connection points with you, and just continual training for us throughout the process, which has been just crucial for us. So yeah, I don't know if does that sum it up?
I think so. Look, I think that I get it. There's a lot of technology solutions out there right now, and it's really hard whether you're a direct user or a service provider looking for the right tools to assess which ones are the right ones and kind of break through all the noise. And I think that's a really important, you know, we focus a lot on the functionality when we kind of talked about this throughout the dialogue, but I think you bring up a really great point about the enablement and the support. Like, you have to get to know the company and align on expectations of how are you going to be there for us? And that's something that's kind of really difficult to kind of drive down into the meat too. So I obviously can only speak for SustainedLife, but that's very core in how we've architected our company and kind of our own product line, in that we really want solution or service providers to be using our tool. And so we dedicate a lot of resources into enabling them and supporting them as they do this with their corporate clients. I know I said that was the last one, but there's actually two that I think are really great. So the first one I'll cover so fast, which was just about when mandatory reporting requirements go into effect into the US. And so California climate laws, they were passed, they were signed into law. We'll send you the white paper on that. SEC expected to come out with its final rule in March. So we'll send you those reports. And then Sarah, what is the biggest challenge when starting with a new client? I don't know if you can boil it down to one, but we've got 30 seconds left. So if anything comes to mind, let's share it.
Oh goodness. Let's see here. I think every client is starting from a different point. So I would say it's figuring out where they're at and what specific needs, you know, they have in the space, because it's not the same for any client. And I think that's what makes it difficult, is each client is going to be very nuanced and subject to different requirements based on their size and based on their industry. And yeah, industry by industry, there can be a lot of different requirements in the space. And so it's figuring all of that out.
Yeah. Yeah. Okay, well, we're keeping ourselves honest here, right on the mark. Thank you so much, everyone, for joining it. Thank you, Sarah, for sharing your insight and perspective as you've gone through this journey at Wipfli. Anyone who has questions that we didn't get to, will follow up with you. If you ask them anonymous, resubmit them with a name so we know where to send the answer. Thank you all again so much, and we will see you next time.